Ladies and gentlemen, an official announcement has been made by AMC that is set to bring about a significant change. On August 24th, AMC is poised to execute a reverse stock split as indicated in the documentation. This maneuver will involve a 10-to-1 reverse stock split for AMC Entertainment, scheduled for August 24th. Hello everyone! Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert: this is not a financial advice video. The morning of today saw AMC confirming the aforementioned reverse stock split, which is projected to be a 10-to-1 division, slated for August 24th. Furthermore, the shares known as APE shares will undergo a transformation into common stock of AMC on August 25th. In essence, the process will entail a sequential series of actions. The reverse stock split will be the first step, followed by the conversion of APE into AMC shares. Subsequently, it is probable that additional equity will be issued, aligning with the plans we discussed last week. Within 10 days, AMC is mandated to inform the New York Stock Exchange before any developments related to the conversion or the reverse stock split. Interestingly, today is August 14th, and in a precisely coordinated move, the reverse stock split is set for August 24th, exactly 10 days later, ensuring no time is lost in proceeding with the reverse stock split. In addition to the reverse stock split, there is another noteworthy point to consider. AMC intends to expand its Class A common stock from 524 million to 550 million shares. This augmentation was disclosed in a regulatory filing, indicating an issuance of around 26 million additional AMC common stock. The timing of this issuance could potentially be shortly after the reverse stock split, perhaps even within the following week. This development likely contributes to the substantial fluctuations observed in AMC's common stock today. The pre-market hours this morning displayed significant volatility, leaving many perplexed by the rapid changes in AMC's value. Interestingly, in the German markets, AMC demonstrated a relatively modest decline of 1 to 3%, in contrast to the more significant downturn witnessed today. The strategic sequence unfolds with the reverse stock split taking the lead, closely followed by the conversion of APE into AMC shares. This paves the way for a probable third step, potentially announced on the subsequent trading day or the following week, wherein AMC could reveal the issuance of an additional 26 million common stock shares. These cascading steps seem to have contributed to the volatile swings in AMC's value during today's trading, particularly noticeable in pre-market hours. The timing of these developments, especially during pre-market and after-market sessions, can indeed provoke a sense of inequity among market participants. It is imperative to gauge the duration of the selling pressure on AMC common stock, which is expected to manifest in two distinct phases. The initial phase will encompass the next 10 days, followed by the prospective issuance of the additional 26 million shares, which might subsequently influence a shift in the dynamics. This anticipation is grounded in the likelihood of further APE share issuance in subsequent phases, following the strategic orchestration of these maneuvers and actions. The post-reverse stock split scenario may potentially fuel speculation regarding AMC's value. Combining both securities could potentially lead to heightened valuations, with estimates hovering around $40, $50, or even $60. After the reverse stock split and the conversion, the next focal point will be AMC's trajectory, guided by Adam Aron's leadership. The strategic positioning facilitated by these actions could place AMC in a favorable position to raise capital, ideally obviating the need for additional capital infusions after the initial common stock issuance. As we navigate these developments, a crucial aspect will be monitoring AMC's price action alongside a keen observation of short interest trends. The cost of borrowing AMC common stock after the introduction of 26 million additional shares could significantly impact short interest dynamics. The introduction of new shares to the open market presents an opportunity for short positions to potentially mitigate their positions. This strategic interplay could lead to speculative opportunities at discounted rates, although the outcome remains uncertain. One hypothesis suggests that if AMC consolidates around $3, demonstrating robust support, it could yield intriguing implications for the market. The narrative seems to have shifted from the lofty $100,000 projections to a more pragmatic focus on $9 per share, as emphasized by Wall Street analyst Wedbush. Wetbush's analysis underscores the pivotal role of the reverse stock split and its aftermath in AMC's journey. The anticipated critical juncture is AMC's ability to sustain a price above $9 after the reverse stock split, potentially paving the way for substantial debt reduction. By issuing 550 million shares of common stock, AMC could alleviate its debt burden, a significant feat contingent on a stable stock price. The premise suggests that as long as AMC's value remains above $9, the prospect of eradicating a substantial $4.4 billion debt becomes a tangible reality. The aftermath of the reverse stock split has made the focus shift from APE to the symbolic 9 hours, signifying the threshold for debt management. This alteration of perspective was evident in the market behavior of APE shares, which experienced a surge followed by a decline, diverging from the astronomical gains seen in AMC 2 weeks prior. The scenario underscores the pivotal importance of AMC's ability to maintain a value above $9. Achieving this threshold would likely alter the prevailing sentiment among critics, diminishing concerns around shorting AMC. The delicate balance between supply and demand will be crucial, as a higher demand for shares relative to supply could result in a more favorable cost-to-borrow scenario for short positions. The introduction of new shares and potential reduced short interest is a phenomenon to watch closely. The narrative around dilution has also garnered attention, with AMC's CEO Adam Aron seeking to allay fears by emphasizing the utility of the shares issued and the potential for debt management. As these intricate maneuvers unfold, the unfolding saga hinges on multiple variables, including market response, investor sentiment, and the interplay of supply and demand. The timing of the reverse stock split and subsequent common stock issuance could set the tone for AMC's near-term trajectory. Amidst the analytical projections and expert opinions, the market's response to these strategic moves remains a captivating and uncertain dimension. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching,